Alright. Today was a perfect introduction to the month of September, which I do love to nickname SeptemBEAR because it typically is a very bearish month. And I think most seasoned traders would agree that when September rolls around, they are looking over their shoulder for days just like today, as volatility kicks into the market and a lot of positions are liquidated. And because it is an election year, we will obviously have lots of volatility around the election as well, with plenty of opportunities for even more volatility. So the first thing I want to caution you against today is simply be aware of the fact that the next 2 months will likely be very volatile. And when I say very volatile, that means both sides of the trade are about to get routed. The moment everybody starts to get extremely bearish and thinks the market can only go lower will be the exact moment we start seeing face ripping rallies. And after face ripping rallies, when the bears are destroyed and everybody is getting bullish, we will likely see more selling. That is what volatile markets do. They don't beat up one side of the market. Volatility works in both directions. So be very aware of that. And if you were ever going to take off 2 months of trading, it should be the next 2 months into the election, because it will likely remain volatile until the election. So that's just some words of wisdom. If you haven't heard anybody tell you that before, take it into consideration, especially if you're a new trader who can't handle volatility or don't know how to manage risk during volatile periods, because you will likely just continue to get stopped out and frustrated as the market is whipsawing around. So today I want to look at the indices. We'll look at the triple Qs and we'll look at SPY, and we'll even throw in Bitcoin as well. And these are the most important to understand because the rest of the market will follow the indices. So if you're trading individual stocks, be aware there's going to be lots more volatility in the individual names. Typically during periods of high volatility, it is best just to stick to the indices, or at least that's my 2 cents. So looking at the triple Qs, it is very obvious after a very bearish day like today, going down over 3% and filling the gap down here at 465 with a high volume selling day, there will be lots of bears coming out of the woodwork and saying, this is it, the market's topped, we are going to crash straight down. And what the bears are likely looking at is the probability this is a lower high rejection, and the probability that this will turn into a much deeper downturn going into the rest of the month. So it is very easy to understand the bear scenario. I told you from my own analysis that we were getting risk off below 473, but keep in mind, risk off does not mean that you just assume we're going into a bear market. It means you should be risk off, meaning if you are buying long positions, you are not looking for some crazy move to a new all-time high in a risk off market. You are looking for bounces off of support in the short term and the possibility of continuing a bear trend. So if we were going lower in the month of September, and if the bear scenario is going to play out, you could still take long trades off of support levels as we're chopping lower and continuing to bounce on the way down. Or even more simple, just stay risk off below 473 and either stay short below that risk off level and let the market go lower, or just stay in cash and wait until we hit a bottom. When we hit a bottom, you're usually going to see mass panic and mass fear, and that is when we likely have hit a bottom, and we're not even close to mass panic and mass fear, because really, if you look at this market, the bulls can still very confidently say there's a good chance the bottom was in back there in early August. And all the bulls are looking for is a higher low before we continue even higher. And keep in mind, that is a very possible scenario. Do not just blindly assume the bearish scenario has to win out. Yes, today was very bearish in a vacuum if you look at today alone, but if you zoom out, it is still very possible the bulls are just looking for a higher low. We have a little bit of a buyer strike possibly until we fill these gaps, and then we just continue higher. And we do have a gap higher as well up there at 493. So this is a very probable scenario. Now, if you're a member in the Discord server, I laid out exactly what I expect in the indices over the whole entire month, and we're off to a great start. But keep in mind, nobody really knows what the stock market is doing. Even though we have been absolutely crushing this market in both directions, there's always the possibility the market wants to do whatever it wants to do and decides to do something differently. So with that being said, yes, everybody knows the market can go up or it can go down. You need to decide where the best risk reward is with the highest probability, and understand that it is a very volatile market. So it could be very frustrating. Even if you're right on a trade, you could still get stopped out due to the volatility and then go watch that trade go on to make money. So only you know what you are capable of. Only you know what is worth taking on risk and what is not. I am not here to tell you you can only go long or only go short. And I'm not here to tell you what is risk on and what is risk off. I'm only here to tell you my analysis and how I view the market. And I do view the market as risk off while the triple Qs are down below 473. So we filled that gap at 465. We have another gap at 454. And we do have a gap up there at 493. Risk off below 473 says there's no way we should be expecting a massive move to the upside unless we're above 473. And while we're below 473, don't rule out the possibility we come down and fill this gap at 454. Even if that means we get a bounce to test the breakdown and then still go lower. As I said, volatility is going to destroy you in both directions if you do not have a trade plan. So anytime we're in a volatile market, I think the easiest suggestion to let you know is that you can make money going short or long. It does not matter because the volatility is wildly swinging in both directions. It is way more important that you have a trade plan. And if you're shorting or if you're going long or when you're going long or when you're shorting, all of that needs to be predetermined from price action. That way, when it's time to act and it's time to trade, you are simply reacting to your trade plan and not guessing or acting emotionally. So it is a volatile market. That means we could have lots of risk to the downside, but that also means we could have risk to the upside because volatility does work in both directions. So keep all of that in mind as we go through the volatile month of September and especially into the elections, because this is likely going to be the theme for the next 1.5 to 2 months. So while we're below 473, you can say risk off. We're looking for the next support zones between 457 and 454. And if we break below that, we're just going to continue to go lower with the next risk level down there around the support at 446. To the upside, we need to break back above 473 and then get back above 484. And then we'll be looking for the gap fill at 493. So play it level by level and day by day and follow a plan. And if you don't have a plan, turn this video off right now and go make one. On the S&P 500, we had the SPY ETF down 2.06% today, and we finally did break out of this range. And I told you this range was between 556 and 565. And with us being so close to the previous all-time high, there's always a good chance sellers are going to show up and lock in the profits. And if we were going to get a bearish short squeeze, we really needed to gap up over that all-time high. And as you can see, we did gap down. So the bears were in control from the open, and then the bears got into the driver's seat and took full control on the break of that bottom of the range at 556. And below 556, we also have to assume SPY is looking risk off with this potential of a double top breakdown below that neckline. And that told us we were at least going to 589. And then below 589, we have another gap to fill down here at 545. So lots of risk to the downside. We have risk off in the triple Qs and SPY. But as I said, risk off doesn't just guarantee we need to go lower. We could still bounce and test that breakdown and then still go lower at a later date. And this is the volatility that I'm warning you about, because it can be very frustrating if you just assume the market is just going to flush and then we get a powerful bounce. So you start to get bullish and then we just continue lower. You are going to feel like you're getting played and whipsawed in both directions, and that could be very frustrating. So have realistic expectations. In a volatile market with the VIX above 20, it is going to remain very volatile. So up and down is very likely here. Risk off while we're below 556. If you want to get bullish at any of the support, that is completely up to you. You manage your risk from support. If we break below support, the risk is rising that we're going to continue lower. And I do want to point it out one last time, this is still a bull trend, and the 20 daily moving average is very aggressively sloping to the upward direction, and it's back above the 50. So do not completely rule out the possibility that the bottom is in from early August and we are simply just looking for a higher low before we continue higher. And this is a possibility. A lot of people are just going to simply write off, and it will catch them off guard, and they will be very frustrated by the market if this scenario plays out. Because after a day like today, when you get an extremely bearish candle and you totally forget there is a bullish scenario, it is very easy to get overly bearish and totally forget we're still in a bull market and a bull trend. So I'm not making any predictions in this video of whether we go higher or lower. I am simply telling you we are currently risk off, and that does not guarantee we have to go lower. It simply means the risk is rising, that we can continue to go lower. And if you're doing something like buying call options in a risk off market, you are not likely going to still be trading in around here by the end of the election. And then very quickly, let's look at Bitcoin, because this is a great indicator of risk on or risk off sentiment. And I really like that range that we're stuck in. And as you can see below the top of the range, we were looking for a push back down to 57,500. But now that we're at the bottom of the range, we need to update this chart a little bit. And I need to give you the new chart which is going to be a new range on a break or hold above this bottom of the range at 57,500. Below it, we go back down towards 53,000, and above it, we can push back to the top of the range at 61,660. So very simple trading here in Bitcoin. It will also be a great indicator even if you don't want to trade it. If we break the bottom of this range, that is going to look risk off. And you can also see it is starting to look like a head and shoulders pattern if we come back up to the top of the range and then break down. And that could send us into a deep spiral to the downside as well. So be aware of all of this. September is the month where everybody is going to be looking to get bearish. And keep in mind, it's also an election year. So people could just be looking to get risk off. And all of that is a recipe for a volatile market that can go a lot lower. So be aware of the risk and be prepared now. And if you got caught off guard today, make sure you step back, understand if you were prepared with a trade plan, and if you didn't have a trade plan, go make one. So I'll jump back over to SPY very quickly just to reiterate how important it is to have a trade plan. Expect volatility all the way up into the election. Volatility works in both directions, so don't get sold on any one scenario. Let price do all the talking around the critical risk levels, and right now price did a hell of a lot of talking today, so make sure you're listening and make sure you respect how quickly a market can get risk off when everybody is running for the door. Doesn't mean it's going to happen, but definitely be prepared for it. So if you want access to the members only video for September and all of my updates, including my trade ideas and my technical analysis, all of that will be in the Stocks Channel Discord server. And you can find out how to join my Discord server in the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.